This is last week's chart of the SPY. This is the S&P 500 depository receipt, or really the SPY ETF. And as you can see here, I want you to pay attention to this pattern for a moment. So this is January, and we spent much of January and all the way almost to the end of February kind of slowly moving higher into all-time highs, year-to-date highs, before doing a little bit of a pullback in March and then a big pullback that happened into the beginning of April before rebounding. Okay, I want you to look at this because we're going to do a different take on the overall markets than we typically do. I want to go into sector analysis with you. So these are the 11 sectors that I follow, starting with basic materials, communication services, consumer cyclical, defense, energy, finance, healthcare, industrials, real estate, technology, and ending with utilities. All right. Of all of these are the number of stocks that fall into each sector, and of course their market cap. Now, I put these up in no order or fashion other than alphabetically to start this particular session off. We're going to rearrange this a couple of times, but before we do, let's take a look at a few sectors that most of us follow. We just don't know we're following them. So when you take a look at healthcare, when you and I think of healthcare, we might think of United Healthcare or any of the big healthcare companies. Well, the big ones are in this particular sector. As you can see, healthcare from the beginning of the year ran up into March, but then did a bit of a drop and dropped hard into April from the highs of 150. Those are the year-to-date highs to lows of 128 before rebounding, right? Here is XLI. This is the industrials. So I want you to think of very similar to the Dow Jones Industrials. You can see that XLI made its high in January before slowly moving south and then making a big move down as we moved in the month of April. Highs at 144, lows at 112.50 before the rebound, but not quite getting back to the beginning of the year. Here is communication. Verizon, AT&T, etc. Highs that occurred in communication were in the middle of February. Lows, like almost everything else, happened near the beginning of April. Bit of a rebound here. 105 is a high, 83 for the lows before rebounding. XLF, this is the financials, all right, the Goldmans, the JP Morgans, if you will, where they hit their highs and really kind of trended near their highs during the month of February. Started to fall, rebound in March, and then the big fall came at the beginning of April from 52.5 down to 42. This is for the ETF sector, XLF. And then I want to show you one more. This is technology. Technology dropped really hard. I mean, it was at its highs nearly at the beginning of the year, the end of January, the end of February, and then, of course, during the month of March and April. The big fallout before, once again, rebounding back, but nowhere near where it started out the year. Is there a pattern here? That's the big thing I want to put to all of you here that are watching this. It seems like everything is dropping from the overall market. So when I first showed you SPY, the only pattern I'm spotting right now, right off the bat, is nearly every sector is following the overall markets. So last week when I said that, is there a washout happening and is it affecting everybody? The immediate answer by looking at what we just stared at on the screen is yes. Everything seems to have topped out in February, March. Everything seems to have really dropped hard into April, and then it looks like almost everything is rebounding. So what we need to do is look at historical performance, and not just one set. We need to look at the weekly, the monthly, the quarterly to see if there's something that the performance numbers are telling us that we're not spotting in the charts. All right, so here's the past week. So if you take a look at the past week, you're going to see that technology is up on top. It made a 10% move over the last week. Basic materials was up really high. But look down here, energy. Energy just really, it rebounded along with everything else, but it rebounded the least. Now I want to take a look at the past month and the past quarter, and I just resort those. And now you can see over the past month, consumer defensive. This is staples, right? This was the high for the past month. Everything else dropped in really hard. Utilities, not so much, but look at energy. Energy was down almost 10%. Real estate down 5.5%. Healthcare, which healthcare typically goes, it typically doesn't drop real hard, but over the last month, remember when I said everything was getting hit hard? Well, everything except consumer staples got hit hard in the last month. And if we take a look at the year to date, that past quarter, we can see that consumer defensive was also up on top, that energy was also close to the bottom. We had cyclical and technology that got hit really hard for the quarter. But you can see energy was down here near the bottom as well. So when you take a look at the week, the month, and the quarter, a couple of things stand out to me. XLP, this is consumer staples. So this is where we start the year out at this level. This is where we are. So it is above the year, the beginning of the year. So you see that high at 84 and that low at 76. XLE, that's the energy sector, the worst performing sector when you look at daily, daily, weekly, monthly, quarterly, it just doesn't add up great for XLE. Energy, oil, gas, actual commodities. Is this a buying opportunity? So as we summarize, looking at sectors, technology making a big comeback due to the tariff clarifications. Is this possibly one of those buy the rumor, sell the news opportunities that's happening with tech? Could be. Consumer staples look to be the best performer for the month and the quarter. This is something that we could pay closer attention to when it comes to looking at buying that trend. And that trend is up. And if we were to come back up and jump above those highs, much like gold, for instance, consumer staples could be one where we just continue to buy the high, buy the high, buy the high if things kind of rotate back down to being bearish across the board. And energy has dropped significantly across the board. When you look at the weekly, it did not perform last week like everything else. When you look at the monthly, worst performer. When you look at the quarterly, almost worst performer. Is a bottom in for energy because it dropped from the highs to the lows so fast. Is there going to be at least a dead cat bounce for the energy markets? Time will tell.